Welcome to XFO Intelligence Podcast, the Legendary Investor Series. I'm your host, and today we're diving deep into the revolutionary world of Jim Simons, the mathematician who cracked the code of Wall Street and built the most successful investment system in history. When Jim Simons passed away on May 10, 2024, at age 85, the financial world lost its most enigmatic genius. The mathematician-turned-investor who founded Renaissance Technologies achieved what seemed impossible. His Medallion Fund delivered an astonishing 66% average annual return before fees over more than 3 decades. To put that in perspective, a $10,000 investment in 1988 would have grown to over $3.9 billion by 2021. But here at XFO Intelligence, we've re-engineered the formula behind this legendary investor. Simon's true legacy isn't just his $23 billion personal fortune. It's the revolutionary system he created, a self-improving machine that continuously discovered and exploited market inefficiencies through mathematical purity, cognitive discipline, and brilliant organizational design. Let me share with you the complete architecture of Simon's success, principles that extend far beyond finance into any complex system you want to master. First, the mathematical foundation. Simons didn't view markets like traditional investors, who focus on economic narratives, interest rates, earnings, geopolitical events. He saw something entirely different: mathematical relationships. His radical insight was that markets aren't driven by rational actors, but by complex systems exhibiting statistical regularities that could be detected, modeled, and exploited. Markets aren't efficient, Simons realized. They're full of inefficiencies created by human behavior. But these inefficiencies aren't obvious. They're hidden in the noise, detectable only through advanced mathematics. At the core of Renaissance's success was the adaptation of Hidden Markov Models, mathematical frameworks originally developed for speech recognition and code breaking during Simon's Cold War days. These models excel at identifying hidden states within seemingly random data streams. Simons recognized that markets operate in different regimes: trending, mean reverting, volatile, calm, that aren't directly observable but influence price movements. But here's where it gets really interesting. Simon's most profound insight wasn't mathematical, it was psychological. He understood that human cognitive biases create the very inefficiencies his models could exploit. While traditional investors tried to overcome their biases through discipline, Simons eliminated them entirely through system design. Renaissance's trading floor was unlike any other on Wall Street. No Bloomberg terminals flashing headlines, no analysts debating Fed policy, no traders shouting orders. Instead, rows of mathematicians and computer scientists monitored algorithms executing thousands of trades per second based solely on statistical signals. Human judgment was completely removed from execution decisions. Simons developed what we call the anti-bias framework: data-first decisions, algorithmic execution, systematic validation, continuous calibration, and compartmentalized knowledge. This created cognitive immunization, a system where human biases couldn't infect decision processes. The organizational design was equally revolutionary. Simons built a self-organizing knowledge network, hiring almost exclusively from academia: mathematicians, physicists, statisticians, computer scientists, not finance professionals. This created cognitive diversity, teams with different mental models that could challenge each other's assumptions. The structure followed mathematical principles: one world-class mathematician per $10 million of capital, optimized connections for collaboration, meritocratic idea flow, and compartmentalized knowledge protection. This created a small world network where insights flowed rapidly to where they created most value. Perhaps most remarkably, Renaissance achieved anti-fragility, the ability to gain from disorder. During the 2008 crisis, while markets crashed, Renaissance's performance increased by 38%. Why?
because market stress amplifies human cognitive biases, creating stronger statistical edges for systematic models to exploit. Simons rejected Wall Street's obsession with home run investments. Instead, he focused on consistently capturing small statistical edges, sometimes as little as 0.1% per trade, and scaling them across thousands of uncorrelated opportunities. The Medallion Fund didn't need to be right 90% of the time. It needed to be right 51% of the time with favorable risk-reward ratios. At Renaissance, capital allocation was a continuous evolutionary process. Capital flowed automatically, reinforcing successful paths while pruning unsuccessful ones. New models started with equal allocations. Successful models received exponentially more capital, underperforming models lost capital and died, with 1 to 15% always allocated to exploration. This created a genetic algorithm for trading strategies where the fittest survived and reproduced, outperforming human portfolio managers because it eliminated emotional attachment to losing strategies. Simon's most revolutionary insight was recognizing that financial success could fuel scientific progress, which could improve trading models. He established the Simons Foundation, committing over $3 billion to fundamental research. This created a virtuous cycle. Trading profits funded research, scientific advances improved mathematics, better mathematics enhanced models, improved models generated more profits. After analyzing all available evidence, we can present the complete Simons success formula, a mathematical equation where sustainable success equals mathematical truth foundation times cognitive bias elimination raised to the power of network effect multiplier times organizational anti-fragility times purpose-driven execution times exponential risk-aware scaling times adaptive evolution rate. The implementation follows 4 phases over 15+ years: foundation building with mathematical purity and cognitive elimination, system integration activating network effects, exponential growth optimizing scaling algorithms, and legacy creation with autonomous governance systems. These principles extend far beyond finance. Scientific research organizations, forward-thinking companies, and individuals can all apply the Simons Code. Truth-seeking grounded in objective reality, systematic bias elimination, network optimization, anti-fragile growth design, and purpose alignment. But remember, the system requires specific conditions: markets with statistical inefficiencies, sufficient computational resources, world-class mathematical talent, long time horizons, and adequate capital base. Jim Simons' ultimate genius wasn't in discovering profitable trades, it was in building a system that continuously discovers profitable trades. His 66% annual returns weren't individual brilliance, but system design that compounds small advantages into extraordinary outcomes. As Simons might have said, don't look for the right answer, build the right system to find it. If you found this deep dive into the Simons Code valuable, please like this episode, share it with fellow investors and systems thinkers, and subscribe to the XFO Intelligence podcast for more legendary investor insights. We're re-engineering the formulas behind history's greatest financial minds, one episode at a time. Before we close, here's our brief disclaimer. This podcast is for educational and informational purposes only. The content presented does not constitute investment advice, financial advice, or trading recommendations. Past performance does not guarantee future results. Always consult with qualified financial professionals before making investment decisions. XFO Intelligence and its hosts are not responsible for any financial losses or gains resulting from actions taken based on this content. Thanks for joining us on this journey into the mind of a mathematical legend. Until next time, keep building better systems. This has been XFO Intelligence, the Legendary Investors Series.